All right, let's talk about something that pretty much all of us grew up with. The one simple rule about money. Just save it. But what if that golden rule, the one we thought was the absolute key to a secure future, was actually making us poorer? Let's dig in. I know. That sounds completely backward, right? Goes against everything our parents and grandparents probably told us. But just stick with me here for a few minutes because the logic behind this is going to completely change how you look at your bank account. So first, let's unpack this financial advice that's been passed down for generations. It's simple, it's easy to remember, and, well, it's probably wrong. And here it is. You know the drill. Step 1, work hard. Step 2, save your money. Step 3, magically retire rich. It sounds so responsible, so logical, doesn't it? But there's a massive pothole on this road to wealth that most of us don't see coming. And that pothole? Well, it's the reason your hard-earned savings are quietly losing value every single day. There's this silent force that's working against all the cash you've so carefully tucked away. And that force has a name: inflation. All it means, in plain English, is that over time, stuff gets more expensive. The $10 in your wallet today will buy you less stuff next year than it does right now. So while your money feels safe in the bank, its actual buying power, its superpower, is fading away. And this isn't some abstract economic theory, right? You feel this. You feel it every time you're at the grocery store, every time your rent goes up, and you definitely feel it at the gas pump. The cost of living is just always on the move up. That's inflation in action. Okay, so this is where the problem really becomes clear. Let's just use some simple numbers. Say inflation is running at 6%, meaning prices for everything are going up by that much. But your savings account? Your bank might be giving you a measly 1% interest. You can already see the gap, right? And here's what that gap really means. You do the math, you're losing 5% of your money's buying power every single year. Your money isn't just treading water, it's actively sinking. It's losing the race against inflation, and it's not even close. So if just saving your money is actually a losing game, then what's the answer? Well, this is where we get into the investor's edge. This is the fundamental mindset shift that separates the savers from the people who actually build wealth. Here's the big secret. Wealthy people don't let their money just sit around. They put it to work. They buy assets, things like stocks, businesses, real estate, things that are designed to grow in value, hopefully much faster than inflation. Let's make this super real. Imagine you have $10,000. You stick it in a savings account. A decade later, you'll have about $11,000. Okay, not bad. But if you had invested it, based on historical averages, that same 10 grand could be worth more than $20,000. We're talking double your money. That's a huge difference. Now, I can hear you thinking, okay, but investing sounds complicated. It sounds risky. I'm not some Wall Street genius. And you know what? I get it. But it absolutely does not have to be that way. You don't need to try and pick the next big thing to get started. So, what is the simpler way? Well, for a lot of people, the answer is something called an index fund. And the concept behind it is honestly kind of brilliant. So, instead of trying to find that one needle in a haystack, that one company that's going to take off, an index fund just says, hey, why don't we just buy a tiny little piece of all the big companies at once? You're not betting on a single horse to win the race. You're betting on the entire race. And the beauty of this approach? It's simple. It's way less stressful. And here's the kicker. Over the long run, this boring strategy has historically beaten most of the professional experts who get paid tons of money to pick individual stocks. How crazy is that? Okay, so we've covered a lot. We've kind of busted this money myth. We've talked about investing. So where does that leave us? How do these two things fit together? It's all about finding the right balance. And let me be crystal clear on this. This does not mean you should stop saving money. Absolutely not. Saving still has a super critical job to do. So here's the best way to think about it. Saving and investing are two different tools for two completely different jobs. Saving is your defense. It's for protection, for your emergency fund, for short-term stuff. It defends you from trouble. Investing, though, that's your offense. That's for growth. That's for your long-term future, for building wealth that actually beats inflation. If you take just one thing away from this entire explainer, let it be this. Saving protects you. Investing grows you. One is your shield. The other is your engine. You absolutely need both to be financially strong. And that leaves us with one final question to think about for yourself. Take a look at your money. Right now, is it just sitting there, slowly losing its power? Or have you put it to work? Is it an employee for you? Or is it just a house guest? The choice is yours.